Welcome to my Let Me Explain. So, first of all, let me explain who I am. Who am I? I'm Dr. Tanya Jackson, PhD, Accounting and Finance. I'm also the founder and CEO of TSJ Financial Services and Consulting. What I do, I empower individuals and communities to transform their relationships with money. I specialize in translating budgeting, credit, taxes, and wealth building into clear, actionable steps that anyone can apply immediately. Why does this matter? I bridge financial confidence gaps by providing education that shifts mindsets, elevates decision making, and builds lasting generational wealth. My impact is that clients walk away with more than knowledge. They gain clarity, control, and a sustainable plan for financial freedom. So when you learn with me, you don't just gain information, you gain transformation. All right. Now let's get into it. And let me explain a little bit about filing statuses. Since we are in tax season right now, let's talk a little bit about merit filing jointly versus merit filing separately. I get this question a lot. It is very common. So we're going to talk about it. So let's move on. Now let me explain. Today we're discussing the important tax decision for married couples whether to file merit filing joint or merit filing separate. The decision affects tax liability, access to credits, student loan payments, and there may or may not be a financial risk. Okay? Now, we're going to go through some scenarios because I really want you to understand and I want it to be clear. So, in the first scenario, scenario one, we're going to look at a dual income household with children. Now, if this is the case and the scenario, then the best option is typically to file merit filing joint. In this particular scenario, we're going to look at James and Alicia. They are married with two children. James earns $85,000 a year, and Alicia earns $60,000 a year. Filing jointly will allow them to claim the child tax credit, child and dependent care credit, education credits, and benefit from a lower tax bracket. Filing separately would automatically disqualify them from many of the credits that I just mentioned. So the outcome in this scenario for James and Alicia would be filing jointly would result in a lower overall tax bill. Now, the teaching point here is that merit filing jointly is typically the best for families with children. And I just explained why, because of all those good credits that you get to take advantage of. Now, in scenario two, there's one spouse that owns a business. Just off the rip, the best option would probably be to file merit filing separately. But let's get into it. Monica owns a consulting business with fluctuating income. Kevin earns $70,000 a year as a W-2 employee. Filing jointly exposes Kevin to Monica's business tax risk because business owners have to either pay their taxes along the way or they need to file the estimated quarterly tax payments. Now, filing separately will limit the liability. The outcome in this scenario would be that a slightly higher tax bracket, but reduced financial risk, especially for Kevin. All right. So the teaching point here in this scenario is that filing separately can be a risk management strategy, depending on your specific situation. So you have to look at it from its entirety to figure out which one works best. Scenario number 3, student loans on income-driven repayment plans. So in this scenario, the best option would more than likely be to file merit filing separately. Here, David earns $55,000 and has $120,000 in student loans. Renee earns $95,000. For this couple, filing jointly increases loan payments due to the combined income. Filing separately bases those payments only on David's income. So it does not consider Renee's income. The outcome in this scenario would be higher taxes, but significantly lower student loan payments. And for most people, they're going to be all right with that. The teaching point here is that the filing status affects cash flow, not just taxes. And that's the piece that I think a lot of people forget. Filing status can be a determining factor on many things. In this scenario, we see that student loan repayments is one of them. Scenario number 4, large medical expenses. The best option here would probably be to file merit filing separately. Karen incurred $40,000 in medical expenses. Mark, he earns significantly more money than Karen, than this $40,000 or than Karen makes. Filing separately allows Karen to meet the deduction threshold using her income alone. All right. So that could be a scenario, a situation, exceedingly high medical bills. We talked about the student loans. In this scenario, the outcome would be increased medical deductions for Karen because of her medical bills. And the teaching point here is that filing separately may help in a situation where there are high medical costs year over year. Scenario 5, and the last scenario, is back taxes owed by one spouse. The best option is probably to file merit filing separately. Here, Anthony owes back taxes from before marriage. Nicole has no tax debt at all. Filing joint risks refund offsets. Filing separately would protect Nicole. And in this scenario, when we say protect Nicole could be considered, if they file joint, Nicole could actually file what we call injured spouse. Now, that may cause delays in whatever refund Nicole may be, eligible for. However, the other scenario would be to file separately, and that way she's completely protected anyway. The outcome will be financial protection from the compliant spouse. So we don't want, the uninjured spouse. The injured, there to be an injury to the other spouse. And the teaching point here is that filing separately can protect your refunds. So if you're married, you have the option of filing either joint or filing separately, depending on whichever scenario works best for your situation. Keep in mind that your tax preparer has the ability to give you both scenarios. So there's a side-by-side worksheet that could be prepared very quickly. It's really beneficial in married cases, cases of married individuals when it comes to filing their taxes, because it actually shows you side by side what the benefit or not is going to be. Okay, so there is that option. Don't be afraid to ask your tax preparer to show you the comparison so that you can make more informed decisions. In conclusion, merit filing jointly usually results in lower taxes and more credits. Merit filing separately can be strategic for liability protection, student loans, medical expenses, or prior tax issues. Always evaluate both options before filing your taxes. The best approach is not guessing. It's running both scenarios and choosing that option that aligns with your household's financial priorities. Tax filing status is not just about that form, it's about financial decisions. Lucky for you, I can help you evaluate both options and ensure your filing choice supports your short-term needs and long-term goals. If you would like to evaluate your options, please visit our website at www.tsjfinancial.com and book an appointment today. Thanks for joining today. Have a great rest of your evening.